But I bought like I'll show you folks when I received the books. But I think I bought like 6 or 7 or 8 of them, and they were all like algorithmic trading books. I don't know. It just I I just suddenly got interested in it, and so I want to learn more, and I want to pursue automation, and yeah, let's see
Six or
where.
seven or eight of them.
Oh,
Oh,
and
hold on.
they were all. Oh, there you go, echo. So yeah, so that's some of the things that I kind of do just to keep on progressing. So it's been fantastic. All right. I
Oh,
just suddenly
oh,
got interested in. Oh, hold on. There we go. Perfect. Okay, so I think we're good to go. And good morning, folks. I see folks are trickling in, and let me get these charts out of the way here, and let's dive into it. So how's everyone? How's everyone this week? How's everything been? We could dive right into the markets. Markets are still strong. I mean, Bitcoin hitting what 103,000. Right? I mean, you got to give Bitcoin a little bit of a break here, right? We had this annual breakout line right here. I don't know if you can see it, but I could annotate. Let's annotate that 1 year, yearly annual resistance right there. We moved over, and the rest was history, right? So this was the line right here, and a lot of big players they ended up getting in over here, and they rode this up. And we had, a humongous move from basically here to here. We had a 53% move, and so, of course, it's going to take a break at 100K, which is good to see, actually. So, yeah, I mean, this is just the rhythm of trading, right? It's actually following through exactly what we want to see. And you know what? We're going to be talking about what I think, setups for next week that one could make money. Again, like this, I guess if you follow closely in terms of like what I talk about every Sunday, you'll notice like every week, right? Just back test me. Back test like the 60 reports that I have on my Patreon, whatever. You could back test me, and you'll see like majority of the watch list call outs, they all go up. Like I would say more than 75% of them. I mean, I don't know. I think a lot more. I would say more than 75, but I don't know. I'm just giving an arbitrary number right here. So yeah, it definitely works. You just gotta be patient, and what's more important is risk management, right? And there are things that we could do to get better at risk management, but um, we just need more practice. That's really what it is. Practice, 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 practice. So welcome, folks. Welcome to another fantastic Sunday. Another was it? This is lecture number 371. I've been doing this for a long time. It's really just the passion of talking about the markets and everything that happens in it, and then just at this stage, constant like what's the word? Constant innovation or improvement of the process, right? Getting better at it. And the markets will always change, but I don't know. Just we'll keep going. We'll keep teaching, or I'll keep talking and see where it all goes. Anyways, yeah. So going into next week, I definitely like Bitcoin. Bitcoin continues to set up. I know we had that first move right there, over 50% move. It's setting up. This basically means that we want to be looking at next week the Bitcoin miners, the Bitcoin ETFs, the anything Bitcoin related vehicles like Coinbase, MSTR, those have a high probability chance of continuing to move or to what's the word? To have a continuation move. So all things that we want to look at. Now, let's get a pulse on the markets, right? Before we even begin, or unless you folks have questions on stocks already, feel free to throw them at me. But let's dive into some of the higher level stuff before we calibrate to individual names. Anyways, so I was sort of traveling last week, right? It's like a local travel, but I'm back this week. My eyes were still glued to the screen. Well, if not, it's glued to the phone, I guess you could say. Markets overall, we continue to sail higher, right? Last week in the weekly report, continue to issue a green light, right? Until I see a yellow light or a red light, I will honestly, I'll do my best to put that out there in the report, right? And that's really the key right there, because if the environment changes to like a yellow light or red light, then I won't be as aggressive. But as long as the rules say, hey, it's still a green light, and we understand that the environment is still good, then I think it's just good for swing trading, right? And I think one of the easiest things that you could track is just the VIX. VIX under 15, that could be just a really good indicator of just a good swing trading environment. So look at the S&P 500 right here. We continue to move higher. I mean, there's not much changes if we track like the last 5 candles right here, one, two, three, four, five. Not really much changes, right? So I would say we probably had like a sideways week, but again, this is just me tracking like the environment, right? So things are still okay in my book. Let's swing over to QQQ, right? Not much changes there on the S&P 500. Looking at QQQ here, pretty much similar. I mean, I guess you say we did push to all-time highs, so QQQ continues to push to all-time highs. That's very good to see, right? That tells us that the environment's still very good. Again, track the last 5 candles because we meet here every week. So 1, 2, 3, 4, 5. So that's progress right there, right? QQQs continue to do progress. We like that. Dow Jones Industrial Average. Again, this might be the boring practice, but I'm forcing you folks to just at least look at this once a week, right? Now, Dow Jones Industrial Average, right? We have that first failure right there at the 20-day moving average. So the next one's going to be the 50-day moving average, right? Just as simple as that. It found some resistance on, basically this top resistance line right here. So it might come back up and retest that. So that's something to anticipate as we move back up. But overall, most indices still look good to me. And then last but not least, we have not at Dow Jones, Russell 2000 with IWM over here. So looking at IWM, right? Again, also similar to Dow Jones Industrial Average, failing the 20-day moving average right there. I know I got a lot of lines on the chart, but work with me here. And we're basically coming back to test this automated trend line right here. So let's see if we can hold right there, right? I'm not nothing to panic or anything about yet. I think the environment still looks pretty good. And I think, well, there is a Wall Street saying that they say if the bulls have Thanksgiving, then the bears have Christmas, right? So Santa rally might not happen, but the environment still looks good to me. Maybe there's a chance of pullback. I don't know. I still think, again, that's just a phrase, right? If the Bulls have Thanksgiving, then the Bears have Christmas. But you never know. It could still be the Bulls have both Thanksgiving and Christmas. So that could be the case. Um, Edward says, what do you think there's a divergence between QQQ, IWM, and DIA? What is the market breadth like? Yeah, and, I think about that as well. We could look at the market breadth as well. Let me show you that. The reason for the divergence, it's interesting, right? Because like the way I look at the markets is like I want to look at all 4 indices just to get the American market view, right? Or America's, I guess you could say. Well, USA market view. Now, if we look at the breadth, right? Breadth is very important. And folks, I track this breadth like I guess I don't know if you say religiously, but I look at the breadth every single week. And I always look at the percentage greater than the 50% day moving average right here. I look at this every week, and this is a really, it's crazy, right? Like I pay Sentiment Trader like $75 a month or whatever, and like this is like one of the main ones that I love to use. Like I feel like I'm not utilizing this platform enough, but this is a really powerful breadth indicator for me at least, because it tells me like okay, in situations where like we're like up here in the red, we're overbought, I tend to see pullbacks eventually, right? So that's something I use it for. So what I see right now is we're just between the red and the green line in terms of S&P 500 breadth. So that basically tells me that hey, we're still like right in the middle. We're still okay. It's like neutral breadth right now, right? If you notice, like in the weekly report that I put out, the market monitor, I basically give like a snapshot of the breath, right? I look at this every week. I force myself to look at this every week. I would encourage you folks to look at it as well because I really like this indicator. It tends to work because like when we're down here, you could catch like really good dips when you feel like when you can see that the markets are like really oversold overall, right? Especially like if you have like real stocks that you're really bullish on, and then the markets overall are very oversold. This indicator, you can come right in and just, the moment it starts to turn up, yeah, the markets turn around and you can cash those trades as well. And same thing on the upside over here. When we're overbought, then you kind of know like, hey, I made, it's been 20% on my portfolio. This is a good gain. I should take a break here, right? It'll tell you when to take a break. So I really look at this every week. Now, to answer your question, like why do I think there's a divergence between QQQ, IWM? I don't think it's a broad divergence. Like I think overall QQ, IWM and Dow Jones, it's still bullish. So I wouldn't say there's a divergence there yet. It's just like I would say short-term micro divergences, but what I would look more of a divergence would be like Dow Jones and IWM below the 200-day moving average for some reason, and then Nasdaq and S&P 500 above the 200-day moving average and very bullish. That would be like an interesting divergence, but I don't really see that right now. So I wouldn't be too concerned, Edward, on the near-term divergences. It's just probably like near-term folks trying to sell out. But as long as I see every week that markets continue to push higher and make the meaningful effort, then I like that, right? Now we also talk about that's America or America's divergence or USA divergence, right? You guys also know I go and look at international markets, and sometimes I also will notice every week when I analyze it that the Japanese market or the European markets tend to diverge as well. So in that case, like it's you need discretion. Like I take discretion, right? So Nikkei right now we're above the 200-day moving average, right? So that's bullish. And then German DAX and European SOX 50 over here, they're also bullish. So to me, it's like I still see, two out of the three critical regions, or actually no, all three regions in the world are still bullish. So I think this is still a bullish environment. So that's the Euro Stoxx 50. I just pointed to the 200-day moving average. We'll look at the German DAX. Look at that. German DAX at all-time highs. I believe that is all-time highs. If we zoom out, it should show all-time highs, right? So, yep, look at that. That's the German DAX right there. So you see how like just like a simple analysis like that gives me like, a strong amount of like confidence to kind of gauge like what's going on at the global level, right? Then we'll go and look at some internal things like, the volatility index and stuff like that, like the VIX right here. And we see that the VIX is still below 15 right here. So this is a healthy practice that I do literally every week just to gauge like, hey, what are traders or the markets, what are the markets thinking about the markets right now? And I can see that the markets right now are thinking bullish going into year end. So yeah. Now another powerful indicator that you guys might notice that I'm using here, and the very highly quantitative one, which is like 30 years of backtest, would be the seasonality of the S&P 500. So I love this one too, and I post it in my report every week. I mean, you don't need to look at this every week, but it's nice to actually look at maybe every month or every quarter. So that makes sense. But I love this indicator because it gives me a feel of like, okay, what months tend to be performing months. And as you can see, this is the month right here that we're in, and the typical performance that we're likely to see in this month right here. So the months that we should be concerned about are basically these 2 months right here from a seasonality perspective, right? So if you notice, like, I'm trying to recall, like, how I know we used it earlier in the year, how we saw a dip somewhere here, right? But then we ran up a lot, and then we saw a dip. But then that dip should be like, hey, seasonality says that this month tends to perform, right? So it kind of gave me the confidence to continue to go through during these months. If any folks recall here, right? This was back in like April, May, right here. Now, then if you look at these months right here, August and September, look at the performance of this is the current year, right? Red is the current year. Look at that performance. So if you knew the seasonality of the markets, you would have pocketed and even like traded these pullbacks right here. I mean, okay, given that this one came a little bit early, it's because we were already up like 20% and it was kind of high. And so any pullback, it was setting up for like this negative seasonality. Uh, you know, August, September here, but it actually came in around. Well, if I put my mouse over here, it basically started mid-July, and then it followed through and bottom in August, and in August we had the retracement. But it's just something to anticipate, right? I don't know. I like this indicator too, and I can see that typically going into year end we tend to outperform, right? So Santa tends to come, at the end of the last 2 weeks of the year, quite a bit. Um, that would be, yeah, like the last two weeks right here. So I don't know. I'm feeling bullish going to year end. If we look at it right now, the S&P 500 is currently up 26.86%. Now don't be like, oh, don't be in your head be like, oh, that's too high, it's gonna go down. That's not how it works. That's not that's not how this game works. It's not about what we want, it's about what the markets want. So that's the reality right there. Okay, cool. So folks, we just calibrated to the markets. That took about 15 minutes. Let's now dive into like, all the awesome names and themes that are happening out there because there's a lot of stuff going on. But I gotta ask you folks too, like, what are you folks interested in? I'd be curious to know what themes or narratives that you're currently following in the marketplace. And then give me one second. I'm gonna drink some water here, clear my throat before we dive into the rest of the session. Oh man, the weather these days, it's like super cold. Yeah, yet I'm drinking like ice water. Okay, anyways, let's dive into it. So, several themes, right? There's the AI theme, there's a Bitcoin theme, there's a rocket theme, there's a quantum theme, there's the FANGs, Magnificent Seven themes, there's the, what a software theme, software making a little bit of a comeback. There's a China theme, made a little bit of a comeback as well. There's a lot of setups out there. Like, there's a lot of, like, I'm excited because I think if you know how to just find it every week, it's pretty fun, right? But for Daniel, Daniel's also been outperforming. For him, like I fine tune what Daniel's looking for. I know exactly what he wants now in terms of like the trading vehicle style, right? Typically for Daniel, right? If you guys know, Daniel made over, I don't know, like he made over 100K this week. Was it this week or in the last like couple weeks or something like that? Daniel's style is basically looking for the most popular stocks in the stock market, right? The ones that have the highest consensus or the highest narrative attention, which is consensus basically. And it has to be, has to have options as well. And Daniel will go in there and he'll buy like the really risky ones, right? The ones that, are 2 weeks to expiration and stuff like that. I'll play them too. I'll play them too. And then he'll size up like crazy. And that's where he's able to turn like, $5,000 into like $30,000 into 100,000 to $150,000. So it's doable. It's definitely doable, but it's very high risk and it's not recommended for like any beginners, right? That's something that you kind of just have to learn over the years, and the best way is just to trade small, and you got to go through the initial pain of just making as many transactions as possible, because you have to build up your transaction experience. That's just how it is. But yeah, that's basically his style, right? Now, going into all the names and stuff like that, I mean, it was really Tesla, right? Tesla, and then also Broadcom as well. You guys see Broadcom right here? I held this one through earnings, and this one gapped up, nice 20%. I sold it, but it's bullish, right? I'm looking to get in more on the pullbacks. This one has some energy to go still, in my opinion. This one goes higher. Right now, this also brings another theme, another narrative to consider is also the semiconductors. So moving into next year, I feel very bullish on semiconductors. I know things like Nvidia and stuff are slowing down right now, but there are some select semiconductor names like Broadcom, ARM, Micron. Well, Micron's down, but ARM's making a move, right? So those might be plays in the coming weeks here. So what I do every week is I focus on like the top plays every week, or what I think could be top movers every week, right? And I try to put that into my report every week. Um, which is really helpful because like it's like what the key thing is what we want to look for is stocks that move, because if the stocks aren't moving you're just going to be waiting another week, right? So that's why like if you notice like man like K's always like putting out these high like high flyers like like if I put this one on the report last week if I recall, and you probably looked at it, you're like man this guy he's putting like $180 stock on here, I can't afford that, but guys like look it's up like 20% this week. So it's like this just that's just how it is. It's hard, but anyways, let me power off the folks who are listening on the live stream. For folks who are listening on the live stream, you gotta read the screen. Come join us.